Good afternoon, everybody. My name is Maurice Button. I'm the CEO of City Financial Global, and welcome to the next in our series of speaker interviews. I'm delighted to have with me today Max Savoie, who's a partner at Sidley Austin. And Max is going to be speaking at our Payments Regulation and Innovation Summit, which is being held in London on the 25th of January next year. Max, welcome.
Thanks, Maurice. Good to be here.
Very good to have you with us. Let's turn to the questions. How do you think that the introduction of PSD3 and the new Payments Directive will affect payment providers across the EU and in the UK? And is there a level playing field from a competition perspective?
Good questions. Let me take those in turn. Well, firstly, I think it will have a very significant effect on the sector. It includes some major reforms relating to fraud, liability, safeguarding of customer funds, and other prudential requirements, access to payment systems and payments accounts, various other conduct of business requirements that will affect firms across the sector. And it's particularly significant for EU payment service providers for obvious reasons, but it's also going to be significant, I think, for UK firms, partly because many UK firms have or are planning to have payments businesses or customers or operations or partners in the EU. And secondly, even for those that don't, even for those that only have a domestic focus, the UK government is going to be watching the EU reforms very closely and may decide in certain areas that it doesn't want to diverge too far from them, particularly because it may want to ensure that UK providers can continue to access Euro payments infrastructure like the SEPA schemes. I'll have a go at your second question as well, which is which is probably a more controversial one about the level playing field. And look, I think there's a number of ways to think about that. You could split that in terms of EU versus UK or national versus cross-border firms.
Yeah.
You could split that in terms of banks versus non-banks. And I think that's often the question we get, and that's often where there's a lot of discussion. And, some might argue there that with areas like safeguarding, with proposals to have authorization of non-banks reviewed, these are things that could make things harder for non-banks. Others may argue that actually some of the additional restrictions on bank de-risking, open banking requirements, rights of direct access to payment systems will all go a long way to creating or ensuring a more level playing field. So, because that level playing field question is so multifaceted, I think the answer here really is whether, or the focus really is whether PSD3 and the proposed regulation that will come with it are going to strike the right balance between things like risk management, access to data, access to infrastructure, and whether firms that have similar business models, services, are regulated in a consistent manner.
Yeah. Okay. And I suppose the new regulations they aim to strengthen user protection and improve consumer confidence in the payment system. Do you think the measures are sufficient to achieve this? And what else might be done to protect users from fraud?
Another good question, not one with an easy answer. Broadly, I think user protection is going to be bolstered by some of the reforms, particularly some of the reforms relating to fraud prevention. That's very much with user protection in mind. Customer disclosures, accessibility requirements for users, particularly relating to strong customer authentication. Those are all reforms with a strong user protection agenda in mind. But again, I think really where we kind of get into the weeds on this is it's important that the regulatory technical standards and the guidance under the regime, which we haven't seen yet, are developed in a way that that ensure that those core requirements are applied in a proportionate, practicable way, and that they take into account the differences between different payment services, business models, different categories of customers across the sector. I think all of that's going to be quite important. So you were asking about fraud as well. And I think the reforms on fraud are clearly intended to send a strong signal to the market that fraud risk is a priority, needs to be taken seriously. But again, in order for the reforms to be effective, the detailed technical standards under those have to be developed in a way that targets risks that are within the reasonable control of the payment service providers, and ensure that those can be mitigated, remediated in a sensible and workable manner. So I hope we can kind of get into the, into the details of some of this during the summer.
Yeah, that would be very good if we can. I mean, the detailed technical guidance, I suppose, is where the problems might come out, if indeed there are any. Turning to the number of non-bank payment service providers, that seems to have grown exponentially in recent years. How do you see this changing the payments landscape? How do you think that the traditional service payment providers will respond?
Well, firstly, I think it's already changed the landscape. It's already changed the market for payments. I mean, when I started advising on payments law, payments regulation about 12 years ago, payments were often seen as a fairly dull, nuts and bolts function provided by a relatively small group of banks, to be frank. And it's become a completely different market. And that is to a large part due to the entry and growth of fintechs and big techs and the rise of e-commerce, online marketplaces, and particularly mobile and other alternative payment methods, as they're often called, which are probably no longer alternative. It's probably the wrong label.
Yeah, that's right. I agree.
Non-bank payment service providers have been a big part of that, sometimes as competitors to the incumbents in the sector, to banks, but sometimes as commercial partners of banks. And I think that has really been the point of the first and second Payment Services Directive and Electronic Money Directive. And so hopefully the reforms will keep that going in a positive way. But I wouldn't write off the banks or the traditional payment systems. They have the advantage of strong, broad-reaching, resilient networks and operational frameworks. And the smarter incumbent players in the market have really embraced the fintech revolution, either by launching new products or new processes on their own, or through commercial partnerships with others, or both in many cases. And the regulatory framework, and particularly how it's changing, is crucial there, because it sets the rules of the game, sets the incentives, it determines who can do what, with whom, and under what conditions and requirements. So it's a very good question, and it links directly into some of the regulatory reforms that I look forward to talking about.
Yeah, and I suppose the net benefit to consumers is obviously choice, but lower costs, and that's probably already quite a strong feature.
It is, and there's always a bit of a trade-off here, because obviously if you ask anyone, do I want things to be cheaper, you're going to say yes. If you ask someone, do I want things to be faster or safer, you're going to say yes. It's a much more difficult question when you say to someone, how do I balance this, and how do I put a price on safety and protection and speed? And that's where the really difficult policy questions are, and that's where the rubber hits the road, if you like, in terms of developing regulatory reforms.
Fascinating. Well, Max, sadly, we've run out of time, but for our viewers, we're going to be delving into all these issues in depth at the Payments Regulation and Innovation Summit on 25th of January in London. Very much hope that our viewers will be able to join us in person or virtually. It just remains for me to say thank you so much, Max. Really interesting.
Thanks, Maurice. Good to speak with you.